Hello, I'm Jame DiBiasio, host of DigFin VOX, Voices in Digital Finance. If you like the program, give us a like, share, subscribe. My guest today is Amnon Samid, CEO of BitMint. Amnon is an Israeli technology entrepreneur with a long career in digital money. We spoke about central bank digital currencies, why he's not in favor of the current craze for DLT-based solutions, and his concerns that too many central banks are ignoring the medium-term, perhaps short-term risks of their money being unzipped by smart quantum computers. Amnon Samid, welcome to DigFin VOX.
You're welcome. I'm happy to be here.
So you are CEO of BitMint. You're based in Tel Aviv, but you spend a lot of time in China and Asia working on projects around central bank digital currencies and particularly safe CBDCs. You've been kind of really in the weeds with a lot of design issues for a long time. I remember we first met probably about 7+ years ago when I had first started DigFin. So I know you've been working on these problems for longer than most people even know what a CBDC is. So why don't we just jump straight into it? Tell me just a little bit about BitMint and how you came to be so involved in CBDC and security design.
Okay. We are talking from Hong Kong now, and maybe I'll start even before BitMint, because I personally, with a partner that later on we are two of the three founders of BitMint, we established already in 1996. It's almost 30 years ago. A company in Hong Kong that eventually became a 440 employee company in the security business in Asia Pacific, mainly in China, but also in India, Vietnam, Hong Kong, Australia, New Zealand, so on. I mention it because from that point, my interest and my enthusiasm with working with people in this part of the world, which are culturally different from my origin. This is from Israel, from Europe, and partners in the US. So it was intriguing for me to work with different people, and I found it very interesting to work with the people. This is something that I have until now. And to make the story short, in 2013, I think it was, I gave an interview in Tianjin local TV. I was part of a mission. And on that time, I said that I foresee in the future that people will have money on their mobile phone and pay phone to phone. On that time, WeChat and Alipay did not exist yet. In China, there was IC cards, the prepaid card. Almost did not use credit cards. The rest of the world did use credit cards. And what I found out later, on the same year, the person that was then the governor of the PBOC, the Central Bank of China, I don't know to pronounce his name exactly, so I will not say it. He was thinking on the same year to start to explore digital currency in China.
Was this Zhou Xiaochuan? Or his predecessor?
I'm not sure. The one that was 18 years, the governor. It was
I think that's Mr. Zhou, but yeah, okay.
Yes. He's still active in lectures. And what is I found out it about 2 years later that on the same time, silently under the radar, he established a small group to explore this option of having digital renminbi on people's phone. No matter how it went later, I can discuss it, but this is a big idea. But on that time, people said that I'm crazy, I'm lunatic. This was the response of many people. They said, we thought you are a serious person. Anyway, I said it because we, in parallel to this ICD security company that we established in Hong Kong, China, and so on, we started to develop digital currencies. Actually, our first patent was in March 2007. It means before Bitcoin was, before
Over the white
Satoshi
paper
announced in October
of
2018. So regardless
2008,
of the
yeah.
Bitcoin. So this is a fact because there is a date of a priority date of applying for a patent. Since then, we have more than 40 granted patents, but it shows the origin.
So talk to us a little bit about the underlying structures. What's necessary to make this kind of movement happen, and how have CBDCs sort of emerged in that context?
Okay. I actually the CBDC as it is now does not, to my opinion, does not merge in the right content.
Okay.
I know many people will not agree with me because now about, I think, 85% of the central banks around the world are exploring CBDC, some of them having actual pilots or launched already CBDC. But to my point of view, all, and I know it's very extreme, all these pilots are pointless because they don't really deploy or the advantages of representing money in a digital form. First of all, it should not be account-based. If you do it account-based, it cannot be much better than Alipay and WeChat Pay, which are excellent. Maybe the best mobile payment in the world. So it must be, like you mentioned before, token-based or value-based. It means that the coin itself, no matter if it is created by a central bank or by a private issuer, the money itself, the token itself, should be on the mobile phone itself. This is the main point.
As opposed to linking that value to, say, my bank account or an account that has my name on it.
Exactly. Because what most CBDCs do now, apart from one project that was done in China by our team, but this is not the main point here, are actually you have in your phone a pointer to your money in a bank account. So some offer, like the ECB, the European Central Bank, offer to have a regular bank account and a digital money bank account. So you will transfer your euros from your bank account to another bank account that will hold your digital euros, but you don't have your actual money in your phone, like cash. If CBDC should be like cash that is open for the digital world. This is the basic, the very, very, very basic. If it's not like cash, don't do it.
Right, because otherwise you're still just dealing with an abstraction, a representation of your money in an account, and the phone is still just this piece of hardware that you have to interface with to get it, rather than the phone having the actual money on it. Like I open up my wallet and boom, here's a dollar bill or whatever.
Exactly, and you don't have any advantage. You don't have any privacy. The validation process is very, very cumbersome, like they do it now. Don't any added value. You want
what's
digital money? Yes.
Yeah. So how have all these projects gone down this road where they're thinking, well, my national CBDC is therefore just you need a separate account to run my CBDC, and if you want to put that in your HSBC account or your Bank of China account or DBS account, then you would still have to make some sort of extra step to move that money from one account to another account, just like you would if I wanted to send money to somebody else through my normal banking, domestic banking payment rail. So what is what's going on in the heads of the designers and the governments when they're and the central banks and their advisors when they're making these sort of account-based CBDCs, instead of thinking that it should be like this cash that's represented on a device?
Okay. I have to guess here, but the guess is based on talking with about 22 central banks in person. I think, first of all, which maybe it's not politically correct to say, central bankers don't really understand what is digital currency or what are the options. Most of them are economists, are lawyers, accountants, financial people. So not technologists. Unlike, the new neobanks, the virtual banks that have a lot of scientists. So they don't really understand. So their way of thinking is of accounts. They cannot open their mind to understand that you have cash. You hold the money in your phone. This abstract of string of bits that is the money itself, they don't get it, and many people don't get it. This is the very basic. String of bits is not a pointer, not a message, is the money itself, like banknotes. This is something they say, yes, you understand. They don't understand because they don't exploit it. This is one. Second, it's quite clear they want to protect, central banks want to protect the commercial banks. They're afraid if there will be digital money, commercial banks will not have any role. I disagree. They will have a huge role there, or they can compete with each other, which they don't do now. But they think their responsibility, not only this, or part of the responsibility for the stability of the national financial system is to protect the commercial banks because they're regulated, are not like private issuers of money that they cannot control, and so on and so on and so on. So they do it for good reasons, but they make damage to the financial system. And I really mean damage, because if they keep the financial system or the payment system as it is now, it is even not ready for the threats of the quantum computers and AI, which CBDC can be more protected against these threats than the current payment system. So they even don't think this way.
Yeah, but we'll get to that.
So the main reason is to protect commercial banks and not being open-minded, really open-minded.
Okay, we're going to get
more of the same, but a little bit different.
Right. So too incremental in their approach rather than taking a leap, which I get, because commercial banks are vital to our economies. That's where money is created. That's where money is multiplied. That's where credit decisions happen in free economies, and they're very important. I guess, what are the takeaways that people are getting? We've seen some experiments, in Nigeria, in the Bahamas, Cambodia. Are we learning anything more from these experiments other than just that it's different if you've already got a shaky financial system that you're trying to build on top of? For places that have sophisticated financial systems, what lessons should they be getting from these early experimentations?
The first lesson is that using DLT, distributed ledger technology, for CBDC is the wrong way to go. This is my first lesson. But each country is different. You mentioned the Caribbeans that launched a blockchain-based
the sand dollar
retail CBDC, yes, in 2020, I think. But this was because a year earlier they were having a widespread flooding and mass destruction of the financial system, and they have a lot of isolated islands. They don't have enough bank branch, so they're having a real challenge how to bring money or cash to the people. So from their point of view, doing CBDC solved a local problem. But they went the wrong way. I think one of the reasons it doesn't succeed because DLT is wrong, and it's not a specific solution. A specific company did it for them. There are good people there. I know them, but DLT is wrong. And now you go to Nigeria, they do the same solution. And Nigeria has an advanced financial system. Ghana and Thailand, okay, they don't expose, the companies are doing for them, don't expose the technology, and maybe it's not blockchain, but it does not really have any added value of the current systems. But I'm less frightened from these small countries. I'm looking more on Europe, on the ECB, on India, on China, on Japan, on the US, on Canada, on the UK, because and even Hong Kong, but Hong Kong I have something good to say, by the way. Also, they are doing DLT, but maybe I'll come to it. These big economies, if they will go in the wrong way, they can cause a currency catastrophe in their countries, and it will influence the entire world. So it's very important. And by the way, Chinese, they approached us in 2014. And they said, we have learned that you, BitMint, has a solution that is quantum resistance. You have solution for digital currency that is quantum resistant. We concluded that they are aware of this threat because China is apparently very advanced in developing quantum computers. If you are advanced in developing quantum computers, you realize the threat of quantum computers. Of course, we don't know how advanced they are, and no one will tell us. We don't know how the US is advanced. Also, IBM and Google, everyone established something, publish something, but we don't really know how advanced. And no one will tell us when they will have a quantum computer that is able to expose everything and
other secrets. What
you know, but other countries, the UK is writing about it, but is not doing anything about it. The only countries that did one trial with quantum safe CBDC was China. All of them are not doing it. And this is really irresponsibility. I have no other way to say it. Irresponsibility from the central bankers. I have to say it clear and loud. I have no interest. I'm too old to have business interest in saying it.
Yeah. What is the correlate? What's the link here? You've said that DLT is the wrong way to go, and you've talked about the security issues and the threats of emergent technology that will expose cryptography, which is baked into Bitcoin and all kinds of communications. What is the link there? Can you talk us through? Are these separate issues, or are these the same issue for you?
It's the same issue, all the same, because the DLTs, and now everyone knows about it. They are limited in scalability, limited in performance. Okay, they try to enhance it all the time. They cannot be sustainable. And I'm not talking about the security. Security, they are based on an algorithm, on cryptography that now everyone knows will not withstand quantum computers, but not only quantum computers. Now there is a new threat of AI cryptanalysis that can find pattern where we people cannot see a pattern. So if they will find the pattern of the CBDC, they will be able to distribute counterfeit money in the country in seconds. And this is a threat that countries have to think about it. I'm not talking about with DLT, you don't have real privacy. It's an illusion that with Bitcoin and blockchain, you have privacy. You don't have real privacy because the pattern of our payment is exposed. And when the pattern is exposed, AI can, okay, we can talk about it later, but AI can profiling you in a way that you will not be able to challenge. And the entire consensus mechanisms are so cumbersome that it uses so much energy, not only for minting Bitcoin, because the CBDC is not based on minting. The central bank will issue, with algorithms, will issue the CBDC, but the validation mechanism is so complicated and requires so much energy.
Right,
and
the
you
whole
can
network
do
is
many.
validated.
Yes. So you have to we have to make sure if we have a new system, it contributes to the environment, it contributes to better security, it contributes to us, the users, the people. We have some benefit. What benefit does bring any of the CBDC pilots to the people? What? I don't see in any country. That I think 11 countries are already doing it. You ask the people, even in China, which is so many trials, most people don't really understand the difference between WeChat Alipay and ECNY. Don't understand. They have another app, another QR. They use it. They get red envelopes. They use it.
Is it a problem that people don't see the difference, or should there be something that they recognize as fundamentally different between a digital cash versus an account in their WeChat or whatever app they're using.
Okay, the first problem is there is no education. Many
Mhm.
people that I talk, okay, I did not talk to 1.4 billion people in China, but intelligent people that I talked even last month, they say no one explained to us what is this ECNY. They say payment system. We thought it is a competition to Alipay and WeChat Pay. We did not see a huge difference. No education. You ask people in Europe, because the ECB is now spending billions of euros on exploring, developing the wrong, I think. Also, they don't expose exactly technologies. They say they are agnostic to technologies. This is something that frightens me when they say it. But spend so much money, public money, they don't explain to the people what it is about. What will they benefit from it? They should start to educate before you launch a CBDC. This is number one. Number two, which is even more important, when you use the DLT and the validation mechanism and the way you create the coin, you cannot really have many added values of payment options that you cannot have today. This is something that is wrong. Because you have to think first of all of the people, of the user, and then on the merchant, and then on the national point of view. All these aspects, all or most, I'd say most to be careful, of CBDC exploration does not meet the minimum requirement. And they can do it, but I don't know why they don't do it, because they don't want value-based, they don't want something else I have to say without mentioning vendors, but because central banks are not technological, don't understand technology, they rely, part of them, rely on big vendors or big consulting firms.
Mm-hmm.
And their responsibility, I see their responsibility more than the central bankers, because they influence the central bankers to go to the way that is good for them, for their business. And this is wrong. China has more than 1,000 people in Digital Currency Institute. They learn from everyone, and they do it their way. Right or wrong is a different question, but they don't want to be dependent on some vendor. This is the right way to do, like with electricity production. You don't rely on outside provider of electricity or water. Every country needs to control their infrastructure. Currency is infrastructure. Payment is infrastructure. You have to control it. Okay, Bank of Canada established some larger team than other central banks apart from China, but they don't go and there is no decision to go to digital dollar in Canada. But most other central banks rely on vendors, and vendors have business agenda, which makes sense.
Yeah.
But
one question before we move on about lack of use case. So these are supposed to be programmable. Programmability, in theory, should allow you to say direct funds to go to certain uses or not, or be prohibited from being spent on certain things. You can see for, say, welfare payments or something like that might be useful in that regard, if or any kind of way that a government wanted to steer a particular policy. We can argue if that's a good idea or not, but in theory, that programmability should make CBDCs sort of an attractive tool. Why aren't you seeing that?
I think we have to separate. The central bank should issue really cash-like CBDC with no restrictions. Only regarding AML and so on, I can talk about it later, that you can maybe suspend a coin. But here is a part of the third parties, of commercial banks, of fintechs, of PSPs. They can take the CBDC that is produced by the central bank, and they can transform it to a CBDC or digital currency that is backed one-on-one on the CBDC of the central bank, and put terms of use. You give a commercial bank can give me a loan for specific purpose, and I will be able to use this digital money only for this specific purpose. And the terms of use could be written on the coin itself, but by the way, if it is token based and not account based. So the token will on the string of the bits, there will be terms of use of the token. This is like we did in our project in China, which was actually the first retail CBDC in the world that passed banking stress test. So not dependent on the network, on the blockchain, the terms of use are written on the coin itself, but this could be separated. The commercial bank can issue such a token. So we don't have the issue of the central banks controlling us, surveillance, and so on, because if I want a coin to be cash-like, I will use the CBDC as is issued by the central bank. If I want to get a loan from the commercial bank, I can get a CBDC or digital currency that is exactly like the CBDC, but with terms of use. And you can make it even more advanced. I can take a loan of 1 million Hong Kong dollars, but I start to pay the interest only when I start using it. When I go to buy something, I used it. From this moment, I start to pay interest. I have it. It's like it's like in the past there was traveler's checks. So you have money that is guaranteed by the commercial bank, but only when you use it, you actually redeem it. So it's digital claim check on the local fiat currency that is one-on-one, not don't need an algorithm to make it stable like the stable coins. Digital claim check, but with terms of use. Okay. And you can do it for any other applications. But so the issue that people say, oh, central banks will control us, you can solve it. On the contrary, you should solve it. You need digital currency that will provide privacy, which you don't have now apart from cash.
Right.
No privacy in payment now.
What's if DLT is not the solution, then what is the underlying architecture that central banks should be thinking about?
Central bank they should think of two important things. One, how to create the digital currency and the creation. Now everything is related to this DLT, the creating and the validation. You have to separate it. You have to create it in the central banks. There are many ways to do it, but important not to rely on the current cryptography that everyone knows now that quantum computers and AI will be able to breach. So, and the sequence of the bits that should not have any pattern, should be patternless. It doesn't have pattern, it will be very difficult for adversaries to distribute counterfeit money. Okay, now when it is already you issued the money, the way to validate it should be payer and payee without any intermediaries, without any consensus mechanism. You need some public ledger. That public ledger will hold the public keys. And I, as a payee, will be able to authenticate through this protocol. This, first of all, that the payer is the genuine owner of this money. This money was not double spent and is valid. This could be done. There are solutions. We also have such a solution. We are not the only ones that have such a solution that also guarantees the privacy of the payer and payee because they're not dependent on anyone. And most of the process, and this is very important, is being done by the two mobile phones of the payer and payee. The meaning is less computing power. The meaning is less energy for cooling in the servers of the intermediaries. So
because
everyone is
the
talking.
Validation happens at the edge, not at some centralized server.
Exactly. So when I do it on my mobile phone, I don't need to cool it because it's in the open world, in the open air. When I do it in a server, so much energy for cooling. and everyone is talking about the environmental impact, but this is a simple way to contribute.
Okay, so let's talk
Okay,
about
this
the
is
security then.
yes.
So if it seems to me that an ordinary person with their phone here can be hacked maybe more easily than like a giant corporation or a central bank. I'm probably being kind to the giant corporations and the central banks, but let's just say it's easier probably to get me, a random person, on a fishing expedition than some organization with a good infosec. So if the payment is at the phone device level, is that also a security issue?
On the contrary, exactly on the contrary,
Okay.
because
Good.
because it involves a public ledger, as I said before.
Mhm.
The public ledger, I didn't want to get too much into details, but okay, I will give some example. The current system with the DLT and also all the private public key solutions for payment are based on one pair of public private key and one algorithm, what is called one-way function that connects the public and the private key. And of course, for example, is Bitcoin, Ethereum, you have to keep your private key very secret. You lose the private key, you lose the money. But if you are being dependent on one pair of private public keys and one algorithm, usually it's the ECC, elliptic curve, that is being used in most CBDCs. When an adversary will be able to breach this ECC, they get your money. So when you are doing it with the public ledger, or what we call the level playing field, every time when I, as a payee, receive a coin from the payer, my application automatically adds another pair of public-private keys and a new random one-way function. And every coin will have a long trailer of public-private keys that are not with the same pattern. So if an adversary breached one, they have no clue what are the others. So you can make it much more secured, and as long as you transact more with the token, you make it more secure. So it's much more secured even against quantum computers and AI counterfeit, which frighteningly even more than quantum computers because it exists already now, than the current payment systems and comparing to all the DLT-based systems. And you have less weak links that you can penetrate, because with the cumbersome procedure, you have many places that you don't know where an adversary will enter.
Yeah.
But
so
changing,
if I receive,
mutating it is very important.
So if I receive that kind of digital cash on my phone, it then creates basically the equivalent of like a one-time pad, which is what the spies would use, right? The ledger and my private key create a whole new, essentially a one-use password that expires whenever I would transact with somebody else who verifies.
It's not a password. It's not a password. You don't need a password, actually.
Okay.
You can add a password if you want to protect your money. You can add your fingerprint.
I guess
this is
what I meant, not a password for the user,
validation,
but for the computer to read. The software would read some sort of hash that would say, "Oh, that's the next the software's password, not me typing in something, but rather it's automated."
It will be even more simple, because I, as a payer, transfer to you the private key, and your application compares it to the public ledger. And the public ledger, I transfer to you not only one private key, all the long trailers. You can call it password, but it's the combination of private public key and the one-way function. You can call it a password. It's a kind of, but it has many passwords. Let's say maybe you have a lock, you have a box with many locks that each of them is different. So you don't have a master key like you have in hotel rooms. The cleaning people have a master key to each room. You don't have, because each one is different pattern through randomness, which is very important. I did not want to get into technology too much, but everything that relates to money or security should be based on true randomness, not algorithmic randomness. Algorithmic randomness means algorithm produce the randomness. It means it has a pattern. It has a pattern, you can find the pattern. You need to do, even in cryptography, pattern devoid cryptography. This is the solution for the future. Actually, it exists already now. That is secured against quantum computers. And it is relevant for cryptography. It's relevant for digital money. Pattern devoid cryptography.
And what about the public ledger? Who maintains or is responsible for the public ledger?
The issuer of the money. If it is CBDC, the central bank.
Okay.
But the public ledger exposes only the public keys, or a long trail of public keys. It does not expose the identity of the payer and the payee. It does not expose the value of the payment. By the way, I did not mention before, but one way, or what we did in China in the first project, we created a digital coin that has a string of bits that represent identity and a separate string of bits that represent a value function, and they are connected together. You cannot separate them. Like you have on a banknote, you have value and you have serial number.
Yeah.
Because Bitcoin, for example, the same sequence of bits represent value and identity. Actually, the values on the blockchain. But when we do it separate, we can have more use cases with the money. And also, if you put it on blockchain, even if you put the way we create the money on blockchain, only the identifier of the coin, not identity of the payer and payee, is exposed on the blockchain, not the value. Now, the value of each transaction is exposed on the blockchain. So if you separate, it's not exposed, but it's separated. You can have terms of use on the money. You can have continuous payment, which no CBDC now enables continuous payment, because or to split the coin on the phone itself, which is very important, without a network. It's important also for offline. If you cannot split, you have 100 Hong Kong dollar on your phone, you want to pay 22 or to the taxi driver. If you cannot split it and you don't have internet, you cannot pay. And the taxi driver cannot give you change. So the splitting option is very important when you structure digital currency, no matter if it's CBDC or stablecoin or tokenizing asset or deposits. So this is important for the way you create the money. A lot of issues that central bankers just ignore because they do copy and paste of similar solutions. I mentioned before, by the way, that Hong Kong, some good, some light I see, at least in meetings that I was having last month in Hong Kong. I saw more openness, both at the HKMA, Hong Kong Monetary Authority, and at the BIS Innovation Hub, at least to listen and maybe even to explore different kinds of creation of coins, of validation, more openness for privacy, which is, maybe the light will come from Hong Kong. I don't know.
Maybe. Let's see. Let's talk a little bit about the security issues that you've raised. You've mentioned a couple times now, so quantum and AI. People have, I guess, a generic idea of these. How long, to what extent do you find central bankers think about these risks, or that the vendor community thinks about these risks? And are the risks growing in terms of the potency of what quantum computing can do, or what AI, as we move inexorably, it seems to me, towards artificial general intelligence? What, basically, can we outpace the developments of these things to maintain security, not just with money, but other things, but in this conversation with money? How are we in a race, and who's gonna win this race?
Who will win? I don't know, but maybe China, maybe. they are more aware of the risks, not enough on the AI risks, but they are very aware of the quantum risks. But they're also aware, maybe more the other countries, that the future wars will not necessarily be physical wars, will be cyber wars. Maybe because, you know, there was a Chinese author, I think his name was Sun Tzu or something like that. It says, win without fighting. And this is some philosophy that many people in the Chinese government, you know, are thinking about. And because they are aware of it, they are also protecting themselves against cyber war. And digital currency is infrastructure. So central banks should be very aware of it. They talk about the quantum security threat, especially since the BIS and the WF in the last 2 years, and also the American NSA, National Security Agency, announced warnings that quantum computers are a threat on everything that is dependent on cryptography, including money, including SWIFT, including everything that is digital is dependent on cryptography. And all current cryptographies will be breached by quantum computers, and I add also by AI. So they call all central banks, all financial systems, all infrastructure in general, you know, power plants, water, and so on, to be ready. And there are plans in Europe, in the US, officially, I assume in China, unofficially, but I know there are plans to migrate to quantum resistant era or systems.
Yeah. Okay.
But they talk about it. They don't do much. Again, I go back to the vendors, because some vendors say, no problem, there will be quantum computers, will add more and more layers of complexity that will protect against quantum computers. And now I know now many people will not like what I say now, even the NIST, the National Institute of Standard and Technology in the US, it is leading a worldwide exploration of post-quantum cryptography. They have 4 candidates. One of them will be announced as standard in this summer that claim to be quantum resistant, but none of them has and could have mathematical proof that are quantum resistant, and no one claim they could have. But they say many years, if no one will breach it, it means it has practical security. Practical security is not enough. You need mathematical proven security. There are solutions. By the way, I found open ears last month in China, I will not say who and where, to this kind of pattern devoid cryptography. And they realize that they must have mathematical proven cryptography also for payment, also for CBDC. Otherwise, you are not protected. This is, but you know, the challenge of AI is even beyond security, because
that's a whole other
AI,
discussion. Yeah.
Yes, but I mean, even related to payment, because AI analytics can compare our expenditure pattern of each of us. And generic algorithms can build brain-like inference networks that will have conclusions about us and profile us. And then one day we'll ask for a grant or for a loan, will be rejected because they say the AI profile said we cannot get it. So we can become innocent victims that we will deny the loan, a job, school admission, you know.
Yeah.
But and we don't understand how AI works. This is the main threat here. And
Right.
here CBDC, if well designed, can solve this issue. We can have CBDCs that will keep payment behavior unexposed. This is of utmost importance. It's beyond the issue of privacy. People say, oh, we don't need privacy, AML, and so on and so on and so on, but not exposing payment behavior. Okay, credit card companies will not do it because they make money from knowing our payment behavior. And Google and all these networks make money from our behavior, not only payment behavior, but we need to prevent this exposure of payment behavior with powerful tools to prevent money laundering, and it goes together. For example, the level playing field that I mentioned before, sorry for making promotion now, but in principle, it deals with these two issues.
Great. I'm going to leave it there. We've talked for a long time. We've gone over my usual 30 minutes, but this has been such a fascinating discussion that I'm glad we had time to get into it. And I know that we have only cracked the surface, so I'm sure people interested will reach out to you. All I wanted to say is thank you so much for joining me on DigFin VOX.
Okay, thank you. Thank you. Always good to talk to you. And I remember you are one of the pioneers that enlightened all these new technologies that will change our life, not only the financial life, but our entire life. I remember you from many, many years ago when you started, we met in Hong Kong, and you really impressed me with your openness, with your open mind, and with your curiosity, which is the most important thing for every listener. Preserve your curiosity.
Great words to end on. Thank you so much for the kind words from you, Amnon, and have a great day.